Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. Today we're doing yet another reaction video to yet another bull versus bear debate on Tesla on one of the finance networks. Hope you guys are enjoying this series. Without further ado, let's get into it.
Cathie, let me start with you. Known for your very bull case scenario here, $7,000 a share on Tesla by 2024. What gets you to $7,000?
There are a number of variables that get us there. The first is our forecast for electric vehicles in 2024 is 34 million units, up from roughly 2 million last year.
This comment from Cathie will no doubt leave a few people scratching their heads. All I can say on this one is go back and look at historical S-curve adoptions for new disruptive technologies. I'm not going to say anything more on this.
So that right there is an exponential growth rate. The second is our gross margin assumption. We are using Wright's Law, which you may have heard us discuss before. Wright's Law gets us from roughly 20% on auto margins in the fourth quarter to roughly 40% during the next 5 years.
I'm sure some of you are wondering what the hell is Wright's Law. I'll put a link to some of ARK's research and sort of explanation around how this plays into the Tesla story, but it's really important that you get an understanding of this. The general idea is that as production volumes increase on a certain product or technology, its costs inevitably will decline. Moore's Law is sort of similar in this regard, but it refers to progress of innovation over time, not related to production volume, which I think is a very important distinction. I think ARK are on the right track here in using Wright's Law over Moore's Law to make these predictions. Again, check the link in the description if you're wondering what the hell are they on about.
And then we're also looking at capital efficiency. Capital efficiency, we see now from Shanghai that Tesla can build a car for roughly $1,000 in capital spending per unit. That is one of the lowest rates out there.
This is a really important point. Cathie isn't just referring to electric vehicles. She's talking about the entire automotive industries. Tesla's cost per unit of capacity in terms of how much they need to spend on a factory versus how many vehicles it can produce every year is already approaching industry leading across the automotive industry. This is really important. They're a young company. It's only going to get better from here.
And finally, our belief that Tesla is furthest ahead in autonomous capability. So in that forecast, we have a 25% chance or probability that Tesla will launch an autonomous taxi network within the next 5 years.
This is worth letting sink in too, because ARK are known as Tesla's biggest bulls. Yet when you look at their reasoning, in this case, for example, they're only assuming that in the next 5 years, by 2024, Tesla only has a 25% chance of launching their robo-taxi network. This is really important because a lot of people just assume that ARK have some really crazy price target and they're insane. They're like hyper bulls that don't see any reason and just pull numbers out of their ass. But when you actually look at their analysis and the numbers and the probabilities that they've assigned a certain outcome, you start to see a pretty reasonable picture. The fact that the price target seems a little bit insane now, it's not their fault. Look at their reasoning and then look at the end result and you'll be like, oh, hang on a minute. I think actually they're pretty reasonable in their analysis here. They're just looking at facts and data points that other people are completely ignoring or just totally oblivious to.
So Ed, let me bring you in here because this strikes home for a lot of people, this ability for autonomous driving. Are we not yet at level 5 or is Tesla not yet leading the way on level 5?
Yeah, so I mean, I think I agree that actually autonomous drive technology is really kind of the key issue here because I don't see how Tesla can sort of justify its current valuation as an auto manufacturer. And there are other issues with EV forecasts that we can get into too. But I think autonomous is the key issue here because that's the only way they get out of Wright's Law aside, what is fundamentally a capital intensive, low margin business.
Very reasonable point so far, Mr. Bear.
But when you look at Tesla, its approach to autonomy is very, very different than basically everybody else in the space.
All right, so let's pay attention to how this argument is being built up. The foundation so far about Tesla's potential to win autonomy is they're doing a different approach to everyone else. Let that sink in.
They're taking money, they're selling cars into private ownership. They're using a very limited sensor suite in order to make that vehicle affordable.
I'm starting to get those, is this bear actually a Tesla bull vibes from this guy? His point is true. Tesla has very intentionally selected affordable hardware to achieve full autonomy, whereas most of the competition is using tens, if not $100,000 of equipment to try and solve the same problem. Think about this for a minute. Are you going to make a mass market affordable car if you've got $100,000 of sensor suites stuck on it? I don't think so. Sure, the cost might come down over time, but why put all this absurdly complicated technology on a vehicle when we know that humans can drive pretty well with just 2 cameras? I think he's on the bull side, might be a bear in disguise that's just really been coerced into coming on television but doesn't want to actually say anything bearish that makes him sound like a fool. So far, these points are all true and relevant. It's just how you interpret them that makes the meaning.
And they're promising that it can do level 5. When basically all the other full autonomy developers are focused on level 4, which means sort of developing a system to be used within a specific geofence and as a robo-taxi fleet, for example, in one city.
Yeah, I'm pretty sure this guy's a bull in disguise and he doesn't want to say anything that makes him sound like an idiot. He's trying to throw out points that could be interpreted as bearish, but come on. The point now is everyone else is only aiming for level 4 autonomy. Tesla is aiming for level 5 autonomy. This is true. If we run things forward a little bit and everyone hits their targets, who ends up with full autonomy and who doesn't? Oh man, let's carry on.
I think, if we're sort of at the, Kitty Hawk stage of autonomous vehicles I was recently in a Waymo that was fully driverless. I think Tesla is sort of like a guy who's putting down or accepting deposits for like an F-35. What they're promising is so disconnected from where everybody else in the space is.
Did you just hear that? Let's watch that again. Let's listen to what he just said one more time.
What they're promising is so disconnected from where everybody else in the space is.
Yes, yes, yes. Nothing else to add. You guys get it, right? Good.
It just doesn't seem plausible.
All right, so after all that build-up, point after point after point after point, the culmination of his argument essentially boils down to this. What Tesla is aiming for is so incredible, so amazing, so disruptive, so transformative, and no one else appears to even be in the race, that clearly it's very unlikely that Tesla will achieve this astonishing thing they're trying to achieve. That's it. There's no, wait a minute, this particular competitor is much further ahead on data, or this particular competitor has demonstrated a much higher level of autonomy. None of this. It's just too good to be true. It can't possibly happen, right? Right? Right?
Cathie, another point that you mentioned was their margins. Are you fully confident that Tesla is able to be profitable really from here on out?
Yes, on average, on balance, yes.
I just want to touch on this profitability point really quickly, and I've got a pro tip for you guys and girls. If you're ever talking to somebody about Tesla and they bring up their concerns about Tesla's lack of profitability, or they're concerned about Tesla's ability to be profitable in the future, you know immediately that you're talking to somebody who either A, hasn't looked at the information, they don't have all the information and they can't draw reasonable conclusions, or B, there's something wrong with their reasoning faculties. They have looked at all the information, yet their interpretation of that information leads to really absurd conclusions. It's not worth even wasting your time. Point them in the direction of the data, and if you've already done that and they still don't get it, it's their loss. If you don't get it, you just don't get it.
I'd just like to address the autonomous points that Edward made. So autonomous is an artificial intelligence project. Tesla is taking a leaf from Apple's book here. Apple was moving the smartphone market ahead so quickly, so much more quickly than Nokia, Ericsson, and Motorola, that it had to design its own chip. And the rest is history.
What a great analogy. The point here is that Tesla is pushing the technology ahead so fast that it literally can't rely on other people to provide the core technologies for this to happen. They need to make it themselves because they're so far ahead that no one else is in the game. No one else is even creating this stuff.
Tesla is the only auto manufacturer to have designed its own AI chip. And our AI analyst, James Wang, who spent 9 years at NVIDIA, took a look at the specs of that chip and said, Tesla is 4 years ahead of any other autonomous auto manufacturer. The other way it's ahead is with data. The winner in an AI project has the most data and the highest quality data. Tesla has 14 billion plus miles of real-world driving data, while Waymo, the closest competitor in this regard, has 20 million, 14 billion, 20 million, and Tesla has 700,000 cars out on the roads. You could consider them robots collecting this data and sending it back every night. And they have the best AI team, we believe, not just in the auto industry, but maybe in almost any industry.
That is the mic drop moment from Cathie right there. It'll go over a few people's heads, but understanding deep learning and how these neural networks actually improve, if you get this, you understand how important data is. The fact that Tesla's data lead is literally orders of magnitude beyond anyone else, just it's game, set, and matched. But if you don't get it, you don't get it.
Right. Ed, final question here to you. Are you doubting Tesla's ability to be profitable from here on out?
Oh no, she didn't. Well, after I've just said my thoughts on anyone that doubts Tesla's ability to be profitable in the future, she asked the question, how will he answer, given my hallucination is that he is in fact a bull that's been brought in to play the bear role, doesn't want to make himself look like an absolute moron on television. Maybe he's seen one of my bull versus bear reaction videos. Unlikely, but hey, you never know. But the point here is it's going to be very interesting to see how he delicately answers this question. Or does he just self-immolate and say, yes, I really doubt their ability to be profitable in the future despite the evidence pointing to the contrary?
Look, I think that they have a lot on their plate that they have to pay for.
What a dodge. Let's watch this again. I'm not going to interrupt. I'm going to let him do the full answer. I'm going to replay that little bit and just let it go through.
Look, I think that they have a lot on their plate that they have to pay for. They have a couple of products, the Semi, the Roadster, and the Model Y, which all have to come out this year. They're building this factory. They're building a factory in Germany that's going to be a lot more expensive. They have a lot to do. And the problem with sort of approaching Tesla as a tech company, people imagine that as like a software company where you sort of make a certain amount of fixed cost investment, and once that's amortized, the variable cost of each additional copy you sell is almost nothing. You know, the auto industry simply isn't like that. And where we see, you know, and Tesla is very easy to understand in terms of these stories, but the problem is that this is not a seed stage startup. This is a company with a track record, and you know, the operational fitness required to be sustainably profitable in this really brutally tough business, you know, is one of habits. This is what we've learned from Toyota. It's about culture, and so you can't just flip a switch and say we're going to be profitable now. It's about developing a culture of continuous improvement and really detail focused, and I just haven't seen that track record there.
I'm sorry, but I did interrupt. It's been a minute, more than a minute, that he's been squirming his way through this answer. Is anyone else as uncomfortable as I am watching this? It's just rewind. I'm not going to replay this bit again, but rewind and just watch the body language. Dodge. He's like in bullet time on the Matrix, just like anything other than answering the question directly, but he knows he'll have to.
So between that lack of operational sort of fitness and the huge expenses that they have to deliver on what they've already promised, I think it can be very difficult for them to be profitable.
So his closing point here comes down to this. Tesla does things that are difficult. It will be difficult for Tesla to do the things they want to do. No shit, Sherlock. Everything Tesla does is difficult, yet they continue to execute. I don't blame the guy. I totally get it. You don't want to go on TV as a bull in a bear's disguise and make an absolute fool of yourself saying completely absurd stuff that you just know is not going to play out, because yes, somebody like me is going to make a video featuring your stupidity. So well played, sir. You're not going to be made a mockery of in a few months' time because you didn't say anything dumb. However, you did a great job of dodging questions, but the foundation of this argument here is effectively, it seems unlikely Tesla can do what they want to do, and it'll be difficult for Tesla to do what they want to do. This is not new information, but it hints at something a little bit more important, and this is the whole point of the video, why I continue to make these reaction videos. A few months ago, I began calling it, the analysts will wake up. They will see what's before our very eyes. They will get it. It will take time, but they'll get it. And this shift in sentiment is happening as we speak. Only a few months ago, there were bears at the drop of a hat willing to go on CNBC or Yahoo Finance and make absurdly bearish calls about Tesla that are just completely ridiculous because the sentiment was very negative, lots of FUD in the media. Oh, Tesla's going to go bankrupt. But it's becoming so painfully obvious and apparent that Tesla is executing. They're going to get this stuff done. Yes, it's difficult, but they're going to get it done. That all the bears are now in hibernation, and all that's left on these finance networks is what I hallucinate to be a bull in a bear's disguise coming on, trying to promote their company or service by okay, I'll play the bear even though I'm not really a bear, get myself on TV, that's good for my business or whatever. But they're not willing to embarrass themselves too much. I doubt they've been watching my bull versus bear reaction videos. Maybe they have. Maybe that's why the bears are in hibernation. But the point here is this. If sentiment continues to shift, which we're seeing right now, as I called, this is the sentiment shift that's happening. Retail investors who previously sat at home with their mouth open being spoon-fed what they should believe and invest in from CNBC and other media outlets will no longer be being spoon-fed such bearish sentiment. That will then open their mind up to the possibility that, oh, hang on a minute. All that FUD about Tesla, I'm not hearing it anymore. Maybe I'll look into this. Oh, what the hell? Holy crap. They're dominating this whole new burgeoning EV market. They've got an unassailable lead in data, the full self-driving chip. They're profitably producing EVs, blah, 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 blah. I might invest in this company. And if we see continued buying pressure from retail investors and the sentiment change continues, we may see Tesla stock's price run continue. This momentum may be sustained as this whole sentiment shift continues to play out through the finance media and through Wall Street. One final closing statement. I think that most of Wall Street knows the story about Tesla now. They're not publicly talking about it. Maybe they're building up positions. There's some shady stuff going on. I don't know. But it really, really blows my mind that anybody who's smart enough to be working for an investment firm or as an analyst, anything like this, who's got the brains to have got the job, is not able to then apply those brains to look at the evidence and draw similar conclusions. The future for Tesla is very bright. Yes, it will be difficult, but guess what? Tesla knows how to execute. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. BS. If you're still watching, you're awesome. This channel has kind of blown up since it launched, and I'm working on making the best possible content for you guys, but it takes time. Consider supporting the channel at patreon.com/solvingthemoneyproblem so I can continue creating content for you guys. There's a link in the description. Either way, the best kind of support is you being here and watching, so thanks again.